So you want to learn how to trade the turtle soup like you see in the video, which is a trade I took with my mentorship students, and you overall want to stop being fearful when buying at the lows or selling at the highs. Well, throughout this video, I'm not only going to explain what the turtle soup is, but explain in a way that's very simple and mechanical to implement into your own trading plan. Before we get into the video, make sure you guys are following me on Instagram. Lots of free education on the market maker model, as well as this is where you guys can reach me if you guys have any questions or want to talk to me direct. So a turtle soup is essentially you buying at the top or buying at the bottom as or soon as price has just taken out a level of liquidity, whether that be an old high or an old low. But that's a little too mundane. At the end of the day, you can't buy every single high or every single low. You just won't be consistent. I'm going to break it down into a framework that is consistent. We must understand the importance of time because the algorithm is programmed to move at certain times throughout the trading day. The turtle soup is a reversal pattern, meaning we have to be in price at a specific time when we anticipate the algorithm to then shift course. The London session is so key because it's known for its reversals called the London high or London low. It's known to create the high or low of the day during London session before reversing in power of 3. We'll talk about this later. So when it comes to the London reversal, that's when we anticipate price to sweep an old high or an old low. And with our entry model, we'll talk about this as well. We can then capitalize on the London reversal entirely. During London between 2 to 5 a.m. EST is when we're anticipating what's called the power of 3. It's when Asia accumulates and then we get a manipulation move to the upside or the downside during a London session. And this is typically when it creates the high of day or the low of day. And then after we create that high or low of day after sweeping liquidity, we then distribute to the opposing liquidity pool. So as soon as we reach up into this level, we want to look for our entry confirmations to then take a trade reversal into the opposing liquidity pool. And then we get this candlestick formation where we have the opening during the Asia session. We create that high up here during that London session, and then we see that massive drop to the downside. This is the power of 3, as well as it's important to not trade London during Monday or when we have red folder news that day. So during the London session turtle soup, I'd want to be on the H1 time frame and M15 time frame, identifying liquidity inside of the marketplace, and then I'd want to be taking my entries as we approach that liquidity pool on the M5 and M1 when I see my entry confirmations. We'll talk about this soon. So the entry criteria I look for after tapping into that key level on the lower time frames is 1, a change in state of delivery. A change in state of delivery is essentially a lower time frame order block. So after tapping into this key level, meaning after taking out liquidity or establishing a lower high, we want to go on the lower time frames, anticipate a break lower in this instance, anticipate that break lower. That last up close candle would then be that bearish order block. And as we come up into that bearish order block and we show rejection from it, I want to anticipate this being the high and then price rejecting from this area to then capitalize on the shorts. Same thing down here. We have this lower level, which is this liquidity pool. We come down into this lower level. We get that break to the upside. And then as we come back down into that last down close candle, I want to see price reject from it. And then as we reject from it and seeing price push higher, that's when I want to capitalize on the longs. The bounce price range in this instance is we see the push to the downside, right? This would then be the bearish fair value gap. We then see this massive push to the upside. This would be the bullish fair value gap. As soon as we close above that bearish fair value gap or pull back into that bullish fair value gap, I want to then take the longs here for that bounce price range entry. So we're looking at GBP USD here for the London session turtle soup. And we can clearly identify this liquidity pool right here, as well as we can also identify this last down close candle right here in the formation of a bullish order block. So coming into 2 a.m. here, if we can reach lower and I can get my entry confirmation either at this low or inside of this bullish order block, I would then capitalize and take longs for that power of 3. So I'm coming down to the M5 here and I want to see how do we react as we take out this low. Okay, so we see a massive push to the downside. Clearly, price is reaching lower and lower prices. Potentially, we could find some support here at that bullish order block. We end up reaching lower into that bullish order block. I'm going to go down to the 1 minute time frame. Now on the 1 minute time frame, I want to look for either a bounce price range, meaning price break above this level completely, or a change in state of direction, last down close candle to act as support. Okay, we get that balanced price range confirmation. I want to take my trade here as soon as we break above that bearish fair value gap. Have a stop loss here just below that last down close candle. And we want to be targeting back above these highs for a 3 to 1 hour trade. Let's see how this then plays out. We get that massive push to the upside, and just like so, very solid. So coming into GBP JPY, we can clearly identify that we have these Asia session highs as well as these Asia session lows. We can also spot this order block down here as well during the London session, and we want to see how does the market react as we reach down into these levels. So the market opens. I'm pretty sure news happened here at 2 a.m. So let's get down to the lower time frames and see if we got our entry confirmation on the M1 time frame. Looking down here on the M1 time frame after price has came up higher from news. So obviously we don't trade before news. News happened. We saw this massive move to the downside, taking out those Asia session lows, tapping into that bullish order block, and we have this bearish fair value gap, as well as this change in state of direction. Then we saw that massive push to the upside from that last down close candle, tapped into it, and then we rejected from it. See that rejection wick breaking above this bearish fair value gap. As we break above this fair value gap, as well as we get that CISD, I want to then take longs here, stop loss down here just below that bullish order block, and same exact thing. This time I want to aim for a 2-1R back inside of this long wick. Let's see how it plays out. Let's hovers around a bit, and then finally TP gets hit. So hopefully you guys saw the logic behind this. Obviously we had news at 2 a.m. We don't trade before news, but we did see news reach up higher, take out those Asia session highs, following that break to the downside. And as we reach down into these Asia session lows, we found support here at this bullish order block level. Then we got that change in state of delivery, as well as that balanced price range. We went long here, stop loss down here, and then we eventually saw the push to the upside for that total soup. So I did post the extended version on my Patreon, which includes the London close total soup as well as a trade breakdown. So my Patreon offers daily trade breakdowns, pre-market analysis and post-market analysis, live trading, my trade plan and risk management plan for passing prop firms, a community of 100 plus traders, as well as in-depth advanced and beginner lessons taught nowhere else. So if that's something you guys are interested in, that's patreon.com/tradersasylum, or it's the first link in the description. It's gonna be it for the video. I'm Arkham. Be safe.